Hello and welcome to this business tips and money saving advice channel. This one is all about a director's loan. What is a director's loan and how do you manage a director's loan in your accounts? But before I kick things off, a little joke. This one of my favourites from comedian Frankie Boyle. And also to celebrate Joe Biden becoming the 46th president of the United States. So, Donald Trump, a man so obnoxious that karma may see him reincarnated as himself. So what the flip is a director's loan then? Well, a director's loan is when you pay money into your company in the form of a loan, and then at some point in the future, your company pays that money back to you. It can also work the other way. It could be where your company pays you some money, and then at some point in the future, you plan to pay that money back into your company. Now, why is that a thing? Why does that even exist? It sounds kind of odd, right? Well, it basically exists, I think, to kind of keep your business accounts as clean as possible. That's my own little theory about it. Because if you, let's say for example, you're at the beginning of your business, you don't have your cash flow established yet, and you start paying lots of expenses out of your personal account. And then, let's say 3 months down the line, you've got cash flow in your business, and then you can start actually paying expenses out of your business account. Well, when it comes to filing your end of year accounts, you'll then have two different accounts to reconcile the transactions from. You need to go into your personal accounts and find all the expenses that you did, and then you reconcile them, put them into a spreadsheet. You then need to go into your business account to get all those transactions, then reconcile those, and it just gets messy. So I think one of the main reasons that it exists is to be able to really kind of keep your business as clean as possible when it comes to your accounts and your cash flow. And I guess at different times throughout my businesses, throughout all 5 of my businesses, I've had dry spells. So you're normally at the beginning of my business when I don't have things fully established yet and fully set up. So what I would do is I would transfer, I'd log into my personal, my personal current account. I would transfer, let's say, not much, maybe 500, 1,000 into my business account. And then once I had my cash flow established, it normally took me anywhere from 2 to maybe 4 months to get my cash flow properly kind of set up. I would pay that money back from the company to myself. Now, when it comes to recording a director's loan within your accounts, there's a common misconception that the best way to do it is to include the loan within your expenses, within the expenses section of your profit and loss statement. And that just isn't a thing, because you could just keep on doing that and you could keep on racking up your expenses in a pretty shady way. And HMRC's a little bit more switched on than that. So what you basically need to do is to set up a separate, I'll talk in terms of Excel spreadsheets, because I normally manage my own accounts with Excel spreadsheets, because it's not hard, it's quite simple. I created a video about it, you can see it up there somewhere. It's all about how you can get an accountant annually for about 40 quid. And manage your own accounts. But basically what I would do is I'd create a separate spreadsheet. I would put the amount which is being paid either from myself to the company or from the company to myself, which is in the form of a loan, and I would manage that separate from my normal set of accounts. Now, when it comes to actually finding my accounts and passing those on to my accountant, I would then give my accountant my normal profit and loss statement, and I'll then give them the second spreadsheet as well, letting them know very clearly that that is a director's account, showing very clearly the money that went from the company to myself and then from myself to the company. And that's it. It's not hard. It's not rocket science. Director's loans are very useful at the beginning of business. Once you got your cash flow fully set up and stable, as I said before, you probably don't really need to worry about them too much, unless you're looking at any kind of big purchases or investments. and that kind of thing. And that's it. So look, guys, I really hope this video was useful. Please do subscribe to the channel, leave me a comment below, like the video, do all that stuff. I do lots of different things on YouTube. I live stream on a different channel. I've got a celebrity interview channel as well, and there's a few comedy bits as well. So look, guys, thanks again for watching. Till next time, cheers.